And as our music fades out, we'll get underway with the midweek market review. Adam here from ReedFX Trading. Thank you for being here and taking the time out to watch this video. I really appreciate it. And I do hope that you will come away from this video and have learned a little something. So we're going to start off on the pound dollar on the 4 hour. I'm going to try and go through it as if it was in real time. And what I want you to take away from this is that once you start trading a particular strategy, or you have whichever way you're getting into the market and whatever you're trading, you've got to stick to it because you don't know what the market's going to do. And this was a good example of a trade that suggested to me that we possibly were going the wrong way, and then we went up to achieve target 1 and 2. So let's move over here. Right, so let me get this trend line tool up first. So we're going to start down here. I'm going to take the triangle tool. I've obviously already measured that. It's already happened. It's a trade that I've been in. So we move up, impulse leg up, we retrace back down. This low wick here gives us the ratio for the first part of our cipher pattern. Then we move up again meeting the correct ratios, and then we move back down. So we've got our completion for the bullish cipher pattern down at 143.92. Now let's go through this in real time and what happened. Stops below this level here, and you'll soon see those. I think I've marked out a trend line down here, so we'll see those in a minute, somewhere around this level here. So let's move through this as if it was in real time, candle by candle. Okay, so big indecision candle there, we move down, lower low, lower close, we move down, oh, we move back up, maybe not getting filled, and there we get filled. Now this candle here, it's a good sign for us. The market moved down, pipped us into the trade, and sucked right back up, and some buyers in there sucking the market back up to close up at this level here. That's obviously a good sign. Now newbie traders, and just like I used to do, I would read that and just assume and just believe that it's sucked back up, so we just must be moving straight on up to both targets. Move on, and then we get another candle in the opposite way. So we did move up, and then we suck straight back down again. So there's sellers. So with those two candles together, we can see there's indecision there. But again, thinking of the newbie trader, maybe you're a newbie trader yourself, the emotions that you're feeling during this, first you sort of convince yourself and believe that it's going to go straight up, and then next candle forms. Because if you think about it, this candle here, it was actually all the way up here, a full bar. That would have been a full green bar there, and you'd have been excited. You would have felt great about that trade, and then all of a sudden, boom, sucks back down. Next thing you know, you've closed back down here. Oh, all of a sudden we're not going up there, and then all the emotions start coming in. And then move down, we close lower than that candle, so it looks like we're on the move down. Indecision, and then we're still moving back up, down, bit of sideways movement, but we're going in the right direction. Okay, so yes, it's sideways movement, but we are holding this level, so we're still in a good position, still up money. And we move to the next candle, the next, and then we start to move off, and the emotions are flying all over the place. We're sort of on our way, and then we achieve target 1. Fantastic. Now, depending on your rules, I don't know how you trade, but if you were to be in this, you'd hit target 1, and stops would have been down here at this level here, where this red line is. Now, once hitting target 1, you should really be moving yourself to break even. I don't know how you trade. Maybe you don't do that. Maybe you don't take 2 targets. But if it was me, I'd be moving this protective stop to break even. So I'm out the trade. It's a risk-free trade. But who I'm talking to, I guess, today is the newbie traders. And it doesn't matter if you've got it. Well, in the beginning, although you are in a risk-free trade, that feels great. You're still feeling the emotions of that second position that would be on. You're still in the trade. Right, now I guess what I should probably say is that on this particular trade, where we would have had targets, or where your standard targets for patterns are at the 382 Fibonacci level and the 618 Fibonacci level, if you're trading 2 targets, this particular trade would have taken would have hit target ones, and then the smartest thing to do would be move your protective stop, your risk, up to break even, so you're in a risk-free position with a second target still running. So this would have hit target one, and then we'll see target one there on that candle, and then come down to knock us out for break even. But if we just forget that for a moment, because all I want to concentrate on is the emotions of a trade. And if you're not disciplined and not sticking to those, or if you had more aggressive targets for target one up here, for example, you'd still be in the position. So let's just forget targets at the moment. When we're moving sideways, we're in money. From basically the point that we entered the trade, it sucked back up and we've been in the money, just moving sideways here. And then we come up to this level, and we attempt to break out again, and the market sucks back down. So when these candles start to form and close and moving down, the fear is kicking in again and again and again, and the panic of, oh, I was up money all of this time, I was up money, and now I'm losing. Now I'm in a negative position. I'm actually losing money here. I'm actually checking the profit and loss, and it's down, and all these emotions and fears, and you want to alter the trade, you want to mess with your position, especially when you come further down and further down. I mean, as we sit down here, a lot of you will be closing out of the trade. You can't, a lot of people, and I'm saying this because I've done it many times in the past whilst I was learning, my journey before I became disciplined with rules, etc. But being up money for all of this period of time, being up money, it hurts when that is taken away from you, because you can't help but assume that that's yours. Even though it's not banked, even though it's not closed, you assume that that is yours, and then that's taken away from you when we move into a negative position, and that is painful. It hurts, and it's not, absolutely not the way you should be looking at your trades. But you can't help it. If we're all honest, you can't help but have those feelings. And then we move sideways a little bit, and then we start to move back up. Now, for the people here, a lot of people would have closed out here. Even here, we move back to a break-even position, and there will be a lot of people just, and there'll be a lot of people just happy to close out for nothing, happy to close out a pip or two in profit and get scared out. And then we move sideways, and then we come up and do it again. So the people that stuck through this pain came into profit again. They're happy. Everything's great once again. Lucky, feeling, and you're feeling lucky. You feel like you escaped a loss. You're in money again. You feel happy. You feel secure. You almost can't help that belief that sneaks in that that's yours. So you're up the money, and then you have this rejection candle once again, exactly the same as this. And when you're seeing these, and you see 1, 2, 3, 4, 5, a big one, then we come down, and then we come back up and see another one identical to this one here. When you're reading those price action signals, the market is suggesting that we're probably moving down, especially when we make a break and close below this level here. So just reading the price action with the candles, it's kind of suggesting that we're probably going to move down, further down. And as we make I gave it away a little bit there, but as we make our move down here, once again, in the money, down money, losing position, a lot of pain through this point here, a lot of disappointment and pain. And then we spike up, and we're in the money, and we're happy again. And then we come back down, and the pain starts, the disappointment starts, the hurt is there again. And then bang, off we go. 2 huge bullish candles, putting us in the money. And I guess my point is, coming from an emotion of confidence and being happy and secure with your position, to taking the pain and the loss of being down here, for people that closed out down here, for the people that closed out happy to escape with essentially a break even, not losing anything. And then the people that had to go through it again, maybe closed out here because it did it before. They're probably sure during this point that it was actually just going to dump off from here, and then bang, point being, you don't know what the trade's going to do. You don't know what price action is going to do. You don't know who's going to come into the market at what particular time, and you don't know what's going to happen. You just can't control it. So therefore, you have your rules, you have your method, your strategy that you trade, and you stick to it. A nice little lesson there, because obviously I could have just said that price moved up, it came down, and we went off to targets. But in real time, when you're in the trade, there's a whole lot of emotion that goes through that as a newbie trader. Obviously, I mean, I was in this trade. I had emotion from here. Oh, we're down. Oh, we're up. Oh, we're down. I would have had that. So I just I just thought it was a good example for you to see, and just to note to yourself, discipline, stick with the trade, and don't alter anything. So that was the pound dollar.